Buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Hey everybody, Smart Silver Stacker here. Welcome to another live stream. So in today's video, I want to talk about supply chain disruptions and the looming port workers strike, mostly because I received several comments on a video I published earlier today asking for my take on these topics and what they will mean for gold and silver. So I thought about it a little bit, and I will give you my take on these things because I do think this could have an impact on gold and silver prices. It's definitely going to have an effect on rising prices, but it might not be exactly the effect on gold and silver that you expect. So let's get into it. First of all, these comments are the reason I'm doing this video. Someone said, wouldn't silver rise with the East Coast ports possibly closing? Now, the video I put out earlier today was about a potential downturn in the silver market, which we may have in the short term. So that explains what that person was saying there. Another one said, good video, you earned a new subscriber. Just one thing, what about the potential for a port strike tomorrow? And then you can see here more comments to that effect. And this is the story from the AP. U.S. port strike by 45,000 dock workers is all but certain to begin at midnight. And I had heard of this. It wasn't really on my radar in a big way, but it's just a labor dispute between the longshoremen and these shipping companies, from what I can gather. And it does seem that in light of the disaster from Hurricane Helene, which as the information comes out, we're seeing is just very devastating to areas of North Carolina, of Florida, of Georgia. There's already a lot of disruption occurring right now in the U.S. supply chains and the U.S. economy. And I do think that it is, inopportune that we're going to see this port strike kicking off at the same time. But based on those comments I was getting, it seems like people think this might have a direct effect on the price of gold and silver, maybe because supply chains will drive prices higher. Maybe they think gold and silver will move along with other prices as supply chains are disrupted. But I think that the impact that this is going to have on the gold and silver markets is largely going to relate to Federal Reserve monetary policy, because this has been a major driver of price action in the gold and silver markets. Now, there's a lot of other factors at play as well. For example, in silver, you have major supply deficits. In gold, you have central banks around the world accumulating it. But the Federal Reserve certainly has a big impact on gold and silver prices. And, for example, we got the 50 basis point rate cut from the Fed recently at the FOMC meeting, and we saw gold taking off to new record all-time highs following that event, and silver putting in some pretty nice gains too. Now, this is the CME FedWatch tool, and you can see that right now the probability of a 50 basis point rate cut at the next FOMC meeting is actually declining. Yesterday it was at 53%, now it's at 37.1%, and this is following some comments from Jerome Powell earlier today, where he said they're going to continue cutting rates, but then he said this is not a committee that feels like it's in a hurry to cut rates quickly. Now, initially, on news of supply chain disruptions of this port strike, you might think that rising prices could have a negative impact on the Federal Reserve's ability to ease monetary policy, because if you see shortages, if you see significant price increases as a result of this strike, that means that it might make it difficult for the Fed to make the case for bigger rate cuts. But here's what I think is actually going to happen. I think that if we see supply chain disruptions driving prices for everything across the board, everything gets shipped, right? Whether it's, Pop-Tarts, gold, silver, tires for your car, jet skis, whatever. Anything could be affected by a port strike or port worker strike. But as you see those prices moving up, I think that this could be a situation like in 2022 where the Federal Reserve was ultimately largely responsible for the price increases that we saw. You know, the CPI was up around 9%. But what did the Fed and the political elites do? Well, they looked for excuses for everything, right? It was the Putin price hike. I think we all recall that term, where it was really, decade plus of extremely easy monetary policy, the Fed monetizing trillions of dollars worth of debt. But the Fed loves to have an excuse. So I think that what we might actually see is, prices are probably going to rise. You probably should be getting ready for supply chain disruptions in light of this strike. It looks like it could be a big deal, especially when combined with the devastation throughout the Southeast that we're currently experiencing. So get prepared for all that stuff. In fact, it might be too late to get prepared in a lot of ways, because many of these disruptions are probably already in effect, so to speak, following the big storm. And now, the strike starts at midnight. But this is going to give the Fed something to point the finger at, because they're unleashing a lot of inflation right now. They just did a 50 basis point rate cut, which is something that historically they've only done in times of emergency. They tell us the economy is strong, like what Powell just told us today. But in reality, they need to cut because the economy is in shambles. And this whole supply chain disruption thing is going to exacerbate those problems. So, it is going to put upward effect on prices. But I think the biggest takeaway here is that this is going to give the political elites, the Federal Reserve, the central bankers, the excuse to cut in the face of rising prices, because they will have a scapegoat. It's not because they're cutting rates, it's because, dock workers are striking. I mean, they'll always find some excuse, and that is typically, how this plays out. Jeff Nelson in the chat here says he just picked up 1,000 rolls of toilet paper. Yeah, you're ready to go, buddy. Of course, you can always use your dollar bills, because ultimately those are going to be devalued to the level of toilet paper as well. In the long term, I want to talk about the difference between long and short-term forecasts real quick and address another comment that I received on that video earlier today. So that video that I posted earlier today is about the potential for a short-term decline in the price of silver. It's just to give you the very, very short version. It's based on this chart. In February, when we saw silver breaking out from around 22 bucks, and it ran all the way up to about 32, it did so in what we would call a Elliott wave impulse pattern. So it had a big run up, then a secondary correction, then another move up, that's the third wave, then another correction, then the fifth wave up to the top. Then we had a correction. Now it looks like silver is kind of entering into another one of these moves higher, and based on that, I think that silver could fall a bit into the end of the week. Now, I got this comment here from Ken Newhouse, so sorry to throw you under the bus here, Ken. I do appreciate you watching, by the way, but I really want to address this comment because it's kind of silly. He says, dude, I have to let you know how bogus your headline is. The title of that video, I think, was, "Is the silver price set up for a fall?" or something along those lines. And he says, lately your headlines have implied that silver is set to go much higher because of the cup and handle formation on the technical chart. I'll talk about that in a moment. And he says, I get that you want clicks, but it hurts your credibility in my eyes when you play both sides of a matter over a matter of days. Either the charts tell us something or they don't. This continual flip-flopping of your technical opinion is lame, all caps. Trends, by definition, do not flip-flop multiple times over a 1-month period. Either you know what you're talking about or you don't, and you're simply bloviating to get more clicks and more sales for SD Bullion. Take a position and stick to it. Well, first of all, you can check out sdbullion.com. That's where I buy my gold and silver, so thanks for mentioning them, Ken. But you got to understand that, you can't just take a position on something and stick to it, at least not in my mind. Being somebody who can accept new information, change your mind based on an evolving situation shows that you probably actually know maybe just a little bit what you're talking about, rather than somebody who, as he says, just takes a position and sticks to it no matter what. But also, I think it's important to note that you can have a differing short-term view of any asset from your long-term view. So to give you an idea of what I'm talking about, this is what the technical analysis in that video was based upon, this daily chart. Now, to see the cup and handle formation that he's talking about, you really got to go out to like a weekly or even a monthly chart, and you can see there's this giant cup and handle formation in silver that it broke out of back in 2020. And then nested within that is yet another cup and handle formation, which I can kind of draw here for you, I think. Not that my trading view skills are that good that I like to do this in real time, but we're sort of in the midst of another cup and handle formation that similarly silver has just broken out a very rough charting there. But I mean, you got to zoom out to the monthly to see those things. And when I was talking about earlier in today's video was just the daily chart. So you can be of a view that an asset is moving much higher in the medium to long term, which is what I think we're going to witness in gold and silver specifically. But in the short term, silver's an incredibly volatile asset. I'm sure anybody who's been stacking for a while knows that. Now, you might hate the fact that silver is volatile, but personally, I kind of like it because it means that periodically we get these chances to buy silver at a discounted price. And what I would take away from this is if you have a long-term bullish view of the metal, however you think there might be a correction in the near future, that can inform your decision making. Keep some powder dry. When you see the dip, buy it. And it's not financial advice. I'm not telling anybody what to do. I mean, I'm certainly not a financial advisor, nor am I a professional technical analyst in any way, shape, or form. This is definitely amateur hour when it comes to forecasting here. And it's also important to note that forecasts, by their very nature, I'm not telling you what's going to happen. I'm telling you what I think is likely to occur. It's all about probability. I don't have a crystal ball. I can't tell you exactly what's coming for silver. But anyway, I just wanted to address that comment because I thought that was kind of interesting. I get comments like that periodically where I'll comment about, I see a short-term potential for a dip in the price of silver, and people say, oh, what is it? Is it going up or going down? So to be very clear, I do believe silver is heading higher in the long term. Now, what do I know? I mean, maybe it is, maybe it isn't, but that doesn't mean that you can't say it looks like we're in for a short-term correction. Now, one reason that I think we could be in for a correction is the fact that silver is up about 46% over the course of the past year. Now, I've got the chart on the screen right now. Sometimes I'll say that number or something along those lines, depending on what the data shows. And people argue, they say, oh, it's not up 46%. Well, here it is right in front of you. This is the one-year chart for silver. Now, this is a silver contract at COMEX, the silver continuous contract chart, but it is up, about 46%. And I think I was pointing out sometime in October of 2023, I don't think I nailed the bottom to a T, but I did call for a bottom in October, and that is what we got. And I, personally bought some silver and some gold. I did an unboxing video and showed everybody what I had picked up at those lows. But, look, silver is a very volatile asset. And, this chart really shows that if you look at it, because you see most of the gains that we see in silver over the past year occurred between October of last year and May of this year. Since then, I mean, silver hasn't gone, in a straight flat line, but it's basically traded sideways with some significant dips along the way. We got back down into the $26, $27 range. That sure was a good buying opportunity. I said it at the time. A lot of people ridiculed me for that, but when silver goes down, if you think it's going to head up in the long term, I do view it as a buying opportunity. So anyway, that's pretty much it. Do we have any questions or anything in the chat? Since we're on a live stream here, I'm happy to address any other questions. If anybody wants to know anything more about the support strike or any of the other things here, I'm looking at the chat. Richard Hunter says, the U.S. should go on the silver standard. Well, we were on a bimetallic standard at one point. At the beginning of this experiment, we had a dollar that was defined as a weight of gold or silver. I don't think we were ever on a pure silver standard, although there have been some of those. China was on a silver standard for a long time. Very interesting history surrounding that, actually, and the Opium Wars and Great Britain and trade with China and all of those things. But yeah, I mean, a silver standard would be great in the U.S. I think probably a gold standard or a bimetallic standard is a better option. Bimetallic is what the founders set us up with, so maybe we should try that out again. Of course, that ended effectively in 1873 with the crime of 1873, although it's kind of complicated because we did have silver in our coinage up until 1964. So one shape, way, or another, the silver has been money in this country up until the 1960s, and it wasn't long after that that Nixon took us off the de facto gold standard that we were on with the Bretton Woods Agreement, and everything's just fiat now. But yeah, we're kind of coming to the end of that. I guess no more questions. Someone says, "Ho's mad." Yeah, I guess that Ken was kind of mad about that. Yeah, I know everybody's an expert in the comment section. And look, feel free to leave a critical comment about any of my videos. I'm always open to criticism, but I will address that criticism as well. And I mean, sometimes it's warranted. I'm certainly not perfect. Not all my calls are right. Do I get it right some of the time? Yeah, and I'm pretty happy to achieve that. I think ultimately you don't have to overthink it too much. You can just stack silver and kind of chill, The cat says, I don't think it's your fault that forecasts change. It would be impossible to do a daily show accounting for all the new data and everything that happened and not go back and forth. Yeah, well, that'd be pretty boring, right? If it was just silver up. And of course, nothing moves up in a straight line. And silver definitely doesn't move up in a straight line. Just look at the 1-year chart here. I mean, zoom out to a 5-year chart. It's a choppy market, up and down. But look, the fundamentals support much higher silver prices. I think that at 31, silver's cheap. If silver goes to 35, I'll think it's cheap. If silver goes to 40, I'll think it's cheap. If you take the inflation-adjusted all-time high for silver, it's like $200. So we're at a fraction of that price now. We're not even at nominal highs. So yeah, if I didn't change my opinions, people would complain about that too, 100%. I mean, you're never going to please everybody, and I'm not trying to. Look, I get it. I mean, you can be critical. We talk about sensitive subjects on this channel as well sometimes, and we talk about money, which is, an important subject and a contentious subject to everybody, but it is important to note, I never say, go out and trade based on what I'm doing. This is not financial advice. This is a show on YouTube that a silver stacker does, right? So, I mean, as a silver stacker, you're already kind of, outside of the mainstream by default, I think. And, I think that'll prove to be in our favor in the long run. Marco Ruiz says, yeah, keep the questions coming. He says, what do you think about roll over your 401k to gold and silver as far as buying physical or just stay diverse? I'm not really sure, man. If you got a 401k, if you do the Roth 401k, there's some advantages with that in terms of taxes and stuff, but I'm not a financial planner, certainly. I know there's gold and silver IRAs. SD Bullion offers those. You can check that out at sdbullion.com if you want to talk to them about incorporating physical gold and silver into your retirement. I've been to their facility where they store that gold that's in their IRAs. It's a very secure facility, top-notch place. So, you could go a lot worse than that, but I don't know. I think it's also important to be diversified. You don't want to just have physical gold and silver. Those are really meant to be like insurance policies, a store of value. It's not supposed to be something that you profit from, really. I think we will in this case because nothing is what you would call quote unquote normal in today's economy. Michael Newell says, same old tired narrative. Yeah, I know. Same old tired narrative of the fact that, endlessly printing trillions of dollars isn't sustainable. What a crazy guy to say that. If Kamala gets in, you better do a Roth. Yeah, Jeff, maybe that'll help prevent some of that unrealized capital gains taxation or something like that. I'm not really sure. If Kamala gets in, we're going to be in trouble, but we're going to be in trouble either way with this election, to be honest with you. No politician is going to be able to solve the types of problems that we have in our economy. Maybe it'll be better or worse one way or the other, but there's going to be a lot of problems either way. All right, well, thanks for the questions, everybody. Oh, here we go. Mr. Chris says, do you think we should buy silver no matter the price, or should we wait for lows? I've just started stacking and I'm not sure. Well, that's the $1 million question, isn't it, Mr. Chris? Welcome to the world of stacking. You could look at the chart and, there's the running gag, but this is true to some extent that, if you buy, that's when the price is going to go down. I've just been dollar cost averaging. That's my approach. Michael Newell says, been waiting for 4 years now. Well, Michael, you're in luck because silver is actually at the highest level that it's been in the past 4 years, or just shy of it. So if you've been stacking for 4 years, assuming that you bought the dips over the past 4 years, you are doing quite well for yourself. If you notice that on the 5-year chart here, going back to late 2019, silver's up about 78.1%. So when people say they're losing their patience for silver, I don't know what you're talking about. I mean, yeah, if you went out and bought a bunch of silver in 2011 at the very high, and then you never dollar cost averaged as it dropped down to what, like $11 in 2020 over the course of those years. I mean, there were plenty of dips. Then I don't know what to tell you. You're not doing it right. Dollar cost averaging is important. And if you bought in all in at a high, I mean, yeah, it's phenomenally bad luck or decision making. I don't know. But yeah, if you've been holding silver for 4 years, you're in good shape. If you've been holding it for 5, you're up about 78%. If you've been holding it since last October, you're up 46%. And yes, there have been times over the past several years, like let's say you bought, I don't know, at the highest point in this chart at 2021, you bought at 28.15. Are you up as much as you could be in other assets? No, of course not. But that, I think, is an indication that silver is just still really cheap. And right now, there's very little that is cheap. Oh, Mr. Chris asked a great question. What is dollar cost averaging? That just means that you keep an eye on how much you've spent for your bullion, how many ounces you have, and you average out your dollar cost for that. So I'm not going to try to give you a mathematical example of that, but I mean, I guess I could. Let's say you have 100 ounces of silver and you bought it in different increments, but overall you spent $2,000 acquiring that. Well, you have a $20 dollar cost average. And the idea is that, when you see the price of silver drop, you go ahead and take advantage of that and you buy the dips and you just bring your average cost of the silver that you have down. This is an important concept. Now, I'm not telling you to do that. Again, I don't give financial advice, but that's kind of how I treat my stacking. I don't worry too much about like, oh, silver's gone up 46%. Should I not be stacking? Yeah, I'll keep stacking. What I'm stacking right now is primarily constitutional silver, the 90% junk silver, because premiums on that are relatively low compared to what we've seen over the past several years. They haven't made it in a long time. A lot of it has been melted down. I've done some videos recently on that. So that is just, what I'm doing. And, I try to buy, I accumulate cash. We all hopefully are earning money, whether it's from a job or side hustles or whatever. And you want to just, accumulate cash and then convert that into hard money at opportune moments. So like last October was a great time to be doing stacking. There was a big correction. I think, what was silver at? Silver was down around $21. Gold dipped at that same time. I think it was in like the mid 1800s. That was a great time to stack. And if you did, you're doing well. But there have been dips along the way. And, you're never going to time it 100%. Properly, if you could do that, why would you even stack physical metal? You could just go out there and buy some options contracts and, multiply your money many times over. But it's easier to just look at the silver market, understand that it's undervalued, and then don't go all in, just kind of stack steadily over time. Anyway, that's my approach, but feel free to leave a comment down below to let me know what you think about that. Richard Hunter says, are you checking your constitutional silver for error coins? No, sir. I do not have the time on my hands to do that. Although, if you're a coin expert, maybe that could be beneficial. But no, myself, I'm not doing that. The cat says, I'm waiting for the mailman to finish up and I have some junk silver in there. Yeah, it's always fun to await those packages, isn't it? Marco Ruiz says, buy my first 3 gold coins. I know, not exciting, but never seen gold in my hands. Well, that sounds pretty exciting to me. The first time you hold a gold or a silver coin, especially if you're a new stacker, it's immediately apparent as money, right? You recognize it. There's something in human DNA or the human psyche, I think, that recognizes gold and silver immediately as money. That's the whole reason that when they took the silver out of the coinage in 1964, they started taking copper and coating it with nickel, like the dimes and quarters and half dollars that we have today, because they wanted to make it look like silver. Because when a human sees a dull copper token with its, reddish color, that is like clearly a base metal, and it doesn't look like money. Although you can have copper money. I think, at some point, I think in like Sweden, they did a copper standard, and you were walking around with these like huge copper bars to pay for things because they produced a lot of copper there. Just as tangent aside, there have been copper standards, but gold and silver are largely what humans recognize as money. So you're going to be pretty excited when you get your first gold coins in your hand. Gold especially, I mean, it's so dense. It really has a nice heft to it, and there's something special about gold coins. Imaginative login name, that's a great name, says, where do I store all this silver? It is really piling up. Okay, well, there's a few places you can store your silver. Certainly you can store some at home, although beyond a certain level, that might be riskier than you want to take on. So you can go to SD Bullion. They have a storage option there, SD Bullion Depository. It's very cheap. You can also bury or cache some gold or silver. I think Silver Dragons did a video recently on those safes that you can bury in the ground. Kind of interesting. And then you can, you can go to upma.org if you like stacking goldbacks. They'll store your goldbacks for free. You can even earn interest on them with a gold-backed lease. So that's, I know it's not silver, but it's a precious metals investment, so you can do that. Again, not advice, just telling you some of the things you can do for storage. Beyond that, I mean, don't put them in a safe deposit box at a bank. I would say that's probably not a good idea, because if the banks fold, that's going to be a time when you want your gold and silver, and they might just shut the doors and you won't be able to get them. Okay, lots of good questions here. Let's see. The cat says, would you recommend sticking to government coins like Eagles, or do you think some slightly cheaper rounds might be good at the moment? Well, I'm not sure. I haven't bought Eagles in a while because premiums have been so much higher. If you can get a deal on Eagles, then those are great. Personally, I like the 90% right now. Rounds are fine too. I mean, look, rounds, bars, it's silver, okay? So if you can get it close to spot, that's always a good deal. But, like what we saw when the banks were failing last year in March of 2023, Silver Eagles became hugely desirable. Yeah, Dirty Man safes. Thanks, Kat. So that's the name of the safes that Silver Dragons was covering. During that time when the banks were failing, Silver Eagles became incredibly desirable, and the premium shot up to like 100% over spot. So there was actually an opportunity to sell your Eagles if you wanted to, and you could flip them into lower premium silver then. Right now, the premiums have, they're still higher than other forms of bullion. They've come down a bit. It's always good to have some Eagles in your stack. I have some. I haven't been stacking them for a while. Lately, I've been focused on 90%. All right, but this is turning into a long live stream. Originally, it was meant to just address the questions about the port strike, but it's turning into a pretty good Q&A. I don't know. Would you like to do these more frequently? I don't know how helpful this is, but it is kind of fun to just do a Q&A. But anyway, that's it for today, everybody. I will catch you next time. Stay safe, happy stacking, and get prepared for potential supply chain disruptions. And regardless of whether the price goes up or down in the short term, until we get the major breakout that I'm expecting in silver, and I mean that could come anytime. Might be years down the road, could be tomorrow. I'm not sure. I don't know. Until that time, silver is going to remain an incredible value. So I am going to keep stacking. Stay safe and happy stacking, everybody. I'll catch you next.